John Maynard Keynes, the great economist of the 20th century, is known not only for his innovative theories, but also for his astuteness in financial markets. Few know that his movements in the stock market made him one of the most successful investors of his time. Keynes managed the funds of King's College in Cambridge, and, over 2 decades, managed to multiply the initial capital 8-fold. How did he do it? His key strategy was to catch the trend before others, but he also mastered the art of patience. In a zigzagging market, he knew how to keep his cool and trust his instincts. It is fascinating that although he was a fervent advocate of state intervention in the economy, privately, he bet on the free play of the market. His daring decisions rewarded him greatly. Keynes maintained a golden rule: study companies thoroughly before investing. He focused on those with fundamental strength and clear growth potential. His ability to identify hidden gems was almost magical. While others were driven by the passing fads of the market, he meticulously analyzed each asset. In 1932, when most were fleeing risk, he invested heavily in stocks after the devastating Great Depression. His keen vision allowed him to buy at prices unimaginable for the time. A 20% annual return was the result of these decisions, making it clear that his ability to foresee the movement of the economic future was as significant as his academic theories. This dual-sided enigma, a brilliant theorist and a bold investor, continues to be an example for those in finance. Keynes mastered the art of balancing risk and safety. A memorable example is his foray into the currency market. In moments of instability, he made profits while others counted their losses. He was capable of perceiving the underground currents of global capital, moving in sync with economic changes. In his papers, he pointed out that one should never blindly follow the crowd. Instead, he argued in favor of exploring the unknown and making informed decisions, even if they seemed to go against the general current. He revealed a unique ability not to get lost in the turbulent oceans of trade. Keynes' market days were not only a lesson in practical economics, but also in psychology in action. Within his diaries, we find a restless mind, always searching for new possibilities. There is something cinematic in imagining him scrutinizing every piece of data, weighing every opportunity. A genius who did not fear making mistakes because he knew that in them lay the learning necessary to succeed. In a world where algorithms dominate, it is refreshing to look back and find someone who, based on knowledge and intuition, mastered both the theoretical and practical worlds. Keynes left us an intriguing legacy. Beyond the numbers, the key is to understand the stories they hold. And in his time, he had the ability to translate those stories into success.